But hi, I'm Dennis Stegwalt, President of the Housing Innovation Alliance. Thank you for joining us on our third Tuesday event in May. This is going to be our conversation on build for rent. And as you can see, we have a team of fantastic panelists from across the construction ecosystem lined up to help us have this conversation. Before we get into the discussion, I want to share a little bit about who the Alliance is and what drives us. So we're a national network of forward-thinking stakeholders from across the construction ecosystem. We're focused on helping the production home builder and their business environment build better towards delivery of more attainable housing solutions. So that we do that through a variety of different market engagement tactics and activities. We host panel sessions like these, in-person events when those things are available and ready to go again. We have podcast series as well as half-day events and another number of other kind of working groups that we conduct behind the scenes with our community, all driving towards more attainability. We like to focus on four key lenses within our community. We look at what is the business of home building, what are the people strategies, what's the process, and what's the product. So by delayering those or looking through it at those four lenses, we're able to kind of spotlight and then spotlight and prioritize innovation within the marketplace. All of the programming and our ability to bring our network together is underwritten by a fantastic group of sponsors and partners. So I want to reach out and say thanks to all of our champions at these individual companies for coming together and helping make our programming possible throughout the course of the year. And now the Build for Rent event itself. So I want to give you kind of a big picture view of what we're talking about here. So Build for Rent obviously has a ton of momentum behind it right now. And you know, there's talk of 40 billion plus in capital on the sidelines waiting to be deployed into the space. What we've looked at it is, yes, this is a huge market opportunity and there's a lot of key benefits it can bring to the industry. The biggest benefit we're looking at as an organization is how does this help us to drive innovation? How do we capture this moment in time to accelerate innovation for this more of a repetitive and kind of, let's say, simplified product design that can then have spillover effects into the single family for sale business segment. So we're going to spend the next hour digging into how we capture this moment in time. This is meant to be a conversation, so please use the chat box. Our moderator, Margaret Whalen, will be going through the conversation today and leading the discussion. But as you feel appropriate, please jump in and add your comments into the chat box. I will be able to bring those into the discussion if Margaret doesn't see them, and please do it so that everyone can see them. Before we get started, I also just want to highlight a piece of content that we created over the past couple of weeks. Brad Hunter from Hunter Housing Economics and our team put together a holistic view of what the build for rent market opportunity looks like today and what it could mean for us in the next few years. So there's a number of video clips as well as this infographic that we've pieced together that were shared through LinkedIn. We're also going to provide the links for this infographic within the chat box right now, and it will be part of the recap. So if you need to familiarize yourself with the market segment or you want to see how we're viewing it as an organization, please take a look at this content piece. And now, with no further ado, I want to get our panel introduced and kicked off. So first and foremost, I want to introduce Margaret Whalen. Margaret is the leader of a boutique investment bank focused on helping progressive companies in the home building industry. She has a fantastic track record of over $25 billion in transactions, I believe. And even more recently, she's worked on nearly $1 billion of build for rent and single family for rent transactions. And she's been involved in a number of high profile offsite construction solutions that have been introduced to the marketplace. So she's the perfect person to have this conversation about the marriage of these two worlds and to bring this to life for us. In addition, Margaret is one of our board members for the past few years, and she's a member of many publicly traded companies, a member of their board, as well as a number of SPAC boards. So with that, Margaret, floor is all yours.
Thank you very much, Dennis. Thanks for hosting the event today, and hello, everyone. I'm grateful that you're all joining us. There's so much interest in build to rent right now, and it's really a nice opportunity to think about making housing more affordable, more attainable, taking waste out of the system. We have a great panel lined up, and I think we'll just go around and have each of the panelists introduce themselves. Then, as Dennis said, I'm going to moderate. We have prepared some questions, and we'd also love to hear from the audience as well. And it's exciting to be here in a Zoom room with all of you, but I'm hoping to see most of you over the next few months as well. I know a lot of us are starting to travel again. I was fortunate to go to Vegas and Phoenix last week, met with Dean out at his factory, spent a day with Steve and his team at Brewer. And I'll tell you, the build to rent in Phoenix is just off the charts. We met with a couple of developers and builders who are starting one house a day, which is a pace of about 20 a month right now. And they said they cannot keep up with supply. They have so many tenants who are already pre-approved. So with that, maybe we'll get started. Steve, if you want to kick us off.
Yeah, absolutely. I am Steve Baum. I'm the Executive Vice President of Construction at the Brewer Companies. We do new home construction, build to rent construction, plumbing installation. We've just started to enter into the build to rent market. We've had a lot of opportunities and a lot of pressure from subcontractors and general contractors throughout that have asked us to kind of dive into this market. And so we've done a lot of analysis around it to make sure that it's a right fit for our organization and how we continue to provide labor for that market.
Thank you. Dean, you want to go next?
Yeah, I'm Dean Rana. I'm the president of TF Companies. We have a truss plant, a lumber yard, prefab wall panels, crane company. We have a couple facilities. We're real passionate about offsite, and we do a lot of different type product lines, multifamily tract homes, build for rent, custom homes. So when we see the build for rent product coming out, we get pretty excited about it for the repeatability, simplicity, and we've helped a lot of people, a lot of builders, a lot of general contractors and labor kind of take it and kind of figure out how to make it affordable, profitable, and being passionate about that product line. And as it comes up and gets really popular in this market, we're capturing that and trying to run with it. So we're here for the long haul.
Thank you, Dean. And Matt, you're in an interesting space as a provider of insurance to the industry.
Yeah, sure am. So Matt Nicholas, Vice President, Real Estate Group at Alliant Insurance Services. Been a commercial insurance broker specializing in the real estate vertical for over 20 years now. But for about the last 7 years, I've focused on the institutional, single family rental niche where this build for rent class developed over the last few years. Alliant is a top 10 national broker and the leader in construction and SFR build for rent sector. Before joining Alliant, I was at Willis, where I was part of a team that created the SFR build to rent practice within the larger national real estate group there, and now part of Alliant's SFR build to rent group. Our team works with more than 70% of the Wall Street SFR units, representing about 250,000 units, and I'm happy to be part of the discussion today.
Thanks, Matt. Rich, are you popping in from a special mission?
I don't know if it's a special mission, Margaret, but it's a mission. I am calling from the Pentagon, and I had a little connectivity thing, so I apologize for the tardiness there. Are we doing intros here?
Yes. Last but not least, Rich Rodriguez.
Wow, could that have been timed better or not? Again, my apologies to the group. Rich Rodriguez, I work with Amherst Homes, Amherst Holdings. We are a private real estate group that is very invested in the single family rental space for everything from developing and building our own communities up through heavy MLS sourcing, as well as the traditional B2R C of O takeouts. So happy to be part of this group. Thank you, Margaret.
Thank you. And maybe I can kick off the conversation. Rich, you and I have known each other a long time. I think you were at Syntex and I was at UBS the first time we met. And a lot of iteration since then in terms of moving from for sale to for rent homes. Tell us a little bit about what you see as the opportunity relative to the theme today in building homes, similar homes over and over, where you see the opportunity to make them more affordable, more efficient, less waste.
Well, I think there is tremendous opportunity. And I think that the opportunity is approaching the business from a different angle. And the easiest way to do that is to compare to the what I'll call just a standard home builder, which I think we all have experience in, the publics or large privates. The way they approach home building is looking at a one-time return on an individual home asset or a community when you make the sale to the end user. The approach from an SFR side, and this is where the opportunity lies, is in the ongoing cash flow and then the underlying appreciation of the asset over a long, long period of time. And by long, I don't mean 5 to 7 years. I mean more like 15, 20, or 25. So given that flexibility in the financial equation, it gives us the opportunity to do a lot of things that the standard retail home builders can't. But you see them getting into this business as well, because that one-time margin just won't allow for the type of innovation or the type of the investment up front that you can if you're going to own something for 25 years or more. So I see that as the largest opportunity.
Good, and I agree with you. Dean, what do you think? I feel like if the frame is spec'd correctly, built with precision, built on time, it makes it easier for all the subs coming in behind. How do you feel about that as a service provider to both the rental and the retail market?
Yeah, obviously, this product line is really user-friendly on the fabrication side. They keep it pretty simple with a couple of units, standardized units, master those, and we can just repeat. So especially all trades, see that as just a win. We do so many different product lines, and we do a lot of national track builders, the D.R. Hortons and the Richmonds, and that multi-plan, multi-elevation, really difficult design time. A lot of room for error, reading starts, different options, salespeople selling options that they don't even have structural plans for. So just when we see the build for rent, being able to fabricate our wall panel division, so we can prefab, working in all the different parts of our entities with lumber, truss, frame, doing the whole package and just pushing out units that we haven't experienced. When as you fabricate, the fun part is the yard loves easy and simplicity, right? So, so the fabrication side, just being able to push the units out faster and less mistakes out in the field. So planning for fast growth and fast units pushing.
Makes it more efficient. Yeah. Steve, your builder hat, you came to Brewer, I think, from MDC. Tell us a little bit about the transition, what it's like to jump across from one side of the business to the other, now to be providing a service to the builders, and in particular, the folks that are doing for sale versus for rent.
Yeah, I did. I had 18 years with two public builders, Beazer Homes. The previous 13 years was at MDC, Richmond American Homes. Been with Brewer Companies now for about 2.5 years, and really the biggest opportunity that I feel we have as subcontractors is learning how to speak in builders lingo, and then vice versa, the builders learning how to speak in subcontractor. We all want the same outcome, and the outcome is to provide the end customer, whether that be someone that's taking down a lease in a build to rent market, or a home buyer, homeowner. We want to provide them with the best possible home to live in that's sustainable and defect free. But we speak in that in two different terms. And so that's been the best part of coming from the builder side to the subcontractor side, is understanding what the needs are from the builder's perspective and how to relate to those, understanding that they have quarter end pressure, year end pressures, and making sure that we're always staying in alignment with what those pressures are to meet their demands, with every public builder being a different, year end, whether it's May or it's September or it's December, and really understanding and helping my team understand how those pressures differentiate from builder to builder, and the pressures that can be put on them from their building superintendents.
And do you feel, Steve, right now, or Dean, in an environment where we have constraints with labor, constraints with the availability of commodities that are fluctuating value-wise, do you feel a pull to work with more rental versus for sale builders at this point?
You can start off.
Yeah, I think it's different, right? There's two different areas that we're in, and at the end of the day, it takes the labor. The labor is we're seeing far more dependable and reliable on the trades in front of and behind us. So we're able to turn those in a quicker manner than we are on the single family residential side. And so with that, it allows us to have a better coordination of our crews and an understanding of what's coming to be ready. That's been probably the best benefit of us entering the build to rent market, is that dependability and reliability of labor in front of and behind us.
Makes it more efficient, more reliable. Matt, anything to add relative to ensuring these homes as they're being built, as they're being occupied?
Yeah, when these houses are being built, I think it's important to focus on strong agreements in place, strong risk transfer through contracts. Don't adopt the vendor's contracts, but the owner should be forcing them to amend the contract to be more agreeable to their requirements. You want to add yourself as an additional insured to the insurance and have it evidence to you from your vendors. Also, I think controlling your insurance program around the build, project specific coverage through SIPs or RAPs as they're known, is probably the strongest way to go about ensuring that risk throughout the duration of the project, and guaranteeing that coverage will be in place from top to bottom through all of the subs that are participating. Strong controls when the homes are under development, fencing, security, surveillance, all of these things kind of put you in as the buyer of insurance in the best light with the carriers.
So just better transparency and governance overall.
Right.
We have a question from the audience about the nature of the builders. Are these the first sale builders that are doing rental projects, or are they new folks to the industry? Maybe Rich, you could answer that.
Sure. I think it's primarily up to date, up to today. It's been the builders that are traditionally retail builders. And if I were to take you back, Margaret, 5, even 10 years ago, when the whole B2R piece was just a dream out there, I can remember presenting to some of the current CEOs of public companies and them looking at me like I had 3 heads when I was trying to talk about what this B2R thing is. Fast forward now, it's a larger and larger part of their business, and they're seeing it as a way to fund other parts of their business, whether it be through pre-sale or financing up front. If you look at the product piece, that's the piece that's also getting the attention of the builders. I think 7 to 10 years ago, let's just call it the early stages of B2R, the end users, the customers, the Amherst, the invitations, the waypoints, they were basically just taking the leftover stock of the builders, whatever was left at the end of the quarter, what end of the year, and flipping that over into their portfolios. Now it's more upfront contracts, so there's a lot more design put into it. But to answer your original question, it's the same builders for the most part, with a few exceptions, similar to like what we're trying to do, is that's build ourselves as well as contract with larger builders.
Dean, anything to add to that, especially where you are in Phoenix? There's so much focus on build to rent. It was really the birthplace, I guess, of SFR coming out of the downturn. There were so many newer homes that were available to be bought and consolidated and rented. But what do you see on the building side now?
As having a Truss plant in a lumberyard, we basically see every project coming through this market, and we see a lot of build to rent. And when we see those types of products, we're a turnkey market. We do business a lot different out in the Southwest, California, Arizona, Colorado, that our customer is a framing contractor. So trying to push offsite and, prefab, the labor kind of controls this market. So when we see these models coming through in this product line, forming a team, I do some work with some big advocates of build to rent, and we've came up with a platform to get all of my entities and his companies to succeed in this market. So he's let us kind of force our product lines get to market, because the struggle here in the Phoenix market is, since it's so labor controlled, there's a lot of piece framing, and they're having a struggle trying to get the piece rate from stick framing to to wall panels. So when we can get the whole product going on the build to rent with the simplicity and the labor side, right? We have these labor constraints where a lot of the traditional national home builders, you build a house, they frame it, they leave, they come back in a week later, do another house. Well, with build for rent, there's 300 units, you blow and go, your crew staying there, they don't leave till the project's done. So pre-planning, prefabbing, scheduling is, I mean, if you ask anybody in my companies that we prefer is because you can just blow and go on these things, and especially labor side, you never pull your crews out till the job's done.
Especially some of those jobs we saw last week, they were starting 1 a day, 20 houses a week. That's such a big velocity. And then, as you said, Dean, they're all pre-spec, so you don't have any options, elevation, upgrade changes the way you would have with a retail builder. Steve, is that improving your cycle times? Are you seeing any improvement there in terms of days to get a job finished?
It is, yeah. So the cycle time's definitely improving with the reduction or essentially elimination of optionality. You know, our crews, we can train crews with the labor demands. We can train them to do one project, and they, again, to Dean's point, they never leave that project. So they're there from day one until the product is complete. And so now we only have to teach them a series of 3 different plans versus teaching them a series of, 1,000 different plans with 500 different options across, multiple builders, and it makes their life more efficient. It makes our quality increase, and then our cost and rework goes down as well. Mm-hmm. And so the cycle times, we're in a build rent project right now with a public builder, and their cycle times are exceeding on the build to rent side versus a single family home side by about 18 days just in one phase of our plumbing task. And then you take the additional phase from what we call box and wrap to top out, they're gaining an additional 23 days. So the build to rent market and that predictability of the trades in front of and behind us is so much better.
Mm-hmm. Matt, anything to add to that from your perspective?
No, I mean, I'm seeing it from our end too. As cycle times shorter, builds happening faster, more efficient, and the controls and the losses seem to be fewer and far between as a result of all of that. So.
Mm-hmm. Dean, we know that the Phoenix is a turnkey market, which means that you are selling the lumber, but also installing it. And then you in particular have a truss factory and labor, you come together to the jobs. Do you think that's going to change going forward? Do you see more interest in that service from the rental versus the retail builders?
So we're not on the labor side. We're material and manufacture only, but I've put a lot of programs together for the labor side to make it work. Let's face it, our labor is not getting any younger. I have 3 boys that the last thing you want to do is frame houses in Arizona in 120 degrees. So how do you make it attractive? How do you push a product line? The starter framing company, you need a few $1 million. Well, coming up with these builders that want to push change and want it, they've been kind of blocked by the framing contractors in town because they don't want to change. So coming up with platforms, being passionate about trying to push change. And I've put programs together where we got a labor arm to all they do is pretty much they're installers now, right? So we've made it simple for our truss layouts, just like Steve puts together all his layouts. They learn 3 plans and they're done. Same thing with, you're only going to frame 2 different type of units, so you can do it in your sleep, repetition. So unskilled labor that, 1 smart guy, 3 laborers, they can blow and go 300 units in no time. So pushing change in this market has been difficult. It's put me in a lot of tough spots, but I'm passionate about it. And now they're starting to realize the savings. And let's look at theft, right? Theft is at an all-time high commodities. Well, nobody wants to steal wall panels, but they'll steal your OSB and your studs all day long. And how many times have you shipped to a house on a stick frame house? You ship your package and then 3 days later, you got to send out 5 studs and more. Wall panels are wall panels. You ship it out once, you have your loose lumber and you're done. So figuring out how to do it and show the savings and showing the labor how it's going to help them has been a struggle, but it's starting to happen.
You're starting to see the benefit. Do you pre-cut for MEP coming in behind you?
We don't, but we're starting to see as demand continues for this product, you'll see a lot more innovation. Prefab everything, stairs, roofs, hip packages, MEP. Michael runs my wall panel division. He's constantly talking to engineers and architects on specing simplicity. So Steve's crew knows that that's ready to roll. So and doing class meetings and collaboration meetings with the different trades and sitting in a room, and everybody's 3D modeling now. So we see those things before we go to the field, and that's what saved a lot of people a lot of time and pain.
Yeah, for sure. Rich, switching gears a little bit, there's a question through the chat, a couple of different questions about sticky tenants. How do you get tenants to stay around for a longer versus shorter period of time? I know that in my experience, the tenants will pay more for a new home versus an older one, sometimes as much as 20% we've seen. And then how do you get them really to stay around for longer? Is it the quality of the home, the quality of the construction, the location?
Yeah. So let me address that this way, Margaret. There's probably two schools of thought on that. One of them is you want the resident to stay in the home as long as possible and avoid the turn costs that occur from resident to resident. And you do that through typical how you do any type of customer satisfaction approach. Good response times, quality products, clean neighborhoods, safe neighborhoods, just good customer support, and they have to see a value in whatever you're charging rent for that product. There is another school of thought that says, well, you don't want them to stay long term, those 3, 4, 5 years, and that's probably a shorter term thought process because of the current market that we're in. Every time a resident turns over, it is an opportunity to move rent much higher than you would in a normal economy. So there's two schools of thought on that. I think that the answer is probably in between. You want good residents and you build those price increases into the lease itself. And so it renews automatically over time.
Does the type of construction, the sophistication of the home, the number of bedrooms, we had a question here about smart technology. Are you building any smart technology into these homes? Does that impact the stickiness of the tenants?
I think it all leads into the customer satisfaction of the resident. We probably have about a third of our homes that are what I'd call smart technology, and it's very basic smart technology. It's temperature controls, water leakage protocols, things like that. As far as the actual constructability of the home, the structural side, we haven't seen a correlation between how it's constructed versus the length of time that someone's going to stay in the home. Now that's a baseline. The home is not falling down. It's good construction. But we haven't, beyond the walls, I'm not sure the resident cares. They're looking for a clean, safe, functional environment. And beyond the walls, they don't, or inside the walls, I'm not sure they really care that much.
Yeah, I've heard some of your peers say that on the smart home side that it's hard to stay in front of the technology. You don't want to invest too much because it can feel obsolete very quickly, or the tenants have different preferences themselves anyway. Steve, if we were to switch gears a little bit, I'd love you to tell the group about the Brewer Academy. I know that's something Mike and your team are very proud of, recruiting and then training high school graduates to be plumbers. Tell us a little bit about how that's making this process easier for you to build in a more challenging environment, and in particular, how you're leveraging the clients you have on the rental side.
Yeah, so in 2018, we kicked off our first class of the Brewer Craftsman Academy. It was really a way that we were looking to keep up with the demand and increase within the Phoenix market and provide support to our customers. So, to take a well-rounded plumber that knows all phases would take 4 to 8 years to create a master plumber. And we tried to figure out ways of simplifying and training to one specific phase, whether it was a soil installation, a top-out installation, even trying to drill down into the top-out installation and create guys that would know how to do water distribution, expanded PEX installation. And so we created our Brewer Craftsman Academy with a target demographic of 21 to 28-year-old men and women that wanted to learn how to do plumbing. And so we offered our first class was a top-out class. and we filled 22 students inside of that class, and then realized all the things that we didn't know about running a school. And so we had, every class we continue to learn. We brought in people from Grand Canyon University to help us, further develop our curriculum, our courses, our feedback from our students on what they feel they missed out on, and asking better qualifying questions. So we currently have a class going right now that is centered around the build to rent market, in which, again, we're training across 2 different build to rent communities that we're involved in. We're training specific to those 3 plans of each of those communities. And they're continuing and have progressed even further than, training to that single family residential side that I mentioned earlier, in which they have to learn how to do, 2 different types of plumbing with different optionality. And it's repetition. It's rinse, repeat. And so we're seeing a far better progression of our classmates, or we refer to them as cadets, within our program. But they've progressed much better than, or faster, I should say, than on the single family home side. But it's a great class. This is class number 12 that we're in right now. And so on this side, we're actually teaching them how to do soil and top out, because we only have to focus on 6 different plans. So they're learning both sides of it, and they enjoy it. And it's been beneficial to us. It's been beneficial to provide that support to our builders. I just wish that more people would definitely get involved with, training additional labor. As Dean mentioned, our labor is aging out, and we have to continue to create that excitement and that buzz, that construction, and you can make a great career out of the construction industry. And so yeah, we use all avenues to take that message out to the young men and women.
Well, I think the simplicity of the build to rent product and the high velocity really helps with repetition. That's how any of us can learn a new craft. So that's exciting that you're attracting them, and you've done it for a couple of years now, and they're staying in the business. We have a question via the chat about the margins on the simpler product versus the more expensive, more elaborate product. My answer would be, if you were to look at the gross margin or the return on capital of the 20 or so publicly traded home builders, it's the folks that have the simplest product that tend to have the highest margin returns, like Horton or Lennar, versus a Toll, which is confusing, right? Because we thought you're giving the consumer all these extra choices and you're getting all these extra margins, dollars in return. But unfortunately, I think the cost to build all of those extra choices and the time is just offsetting the upside. We also had a question from the esteemed George Casey about the simplicity of the product, or some of the big national builders starting to do the simple product. They are, George. Meritage had started, Horton had started a couple of years ago. In fact, Horton has that spec model, and going into the pandemic, everyone thought they were going to have a tough quarter, a tough cash squeeze, but actually they were able to sell houses more quickly than most folks because of that. Don Hubble, or one of the big builders in Boise, has an all spec model as well, which has been very helpful for them. Rich, if we could take it back to you for a second, just given that you're the only build to rent operator here, how has the frenzy, the interest, all the capital coming into the build to rent SFR space in the last year, we saw a statistic before you joined us about 140,000 build to rent houses expected to be built in the next 5 years. How has that impacted your ability to get supply?
It has made it much more difficult to get supply. There was a time when it was just a handful of takeout options for the builders, and before B2R became sort of mainstream, or B4R, B2R, I'm using those interchangeably. And that, for that reason, you're seeing more and more operators start to get into the builder business themselves. And that's pushed back into the life cycle of the product, whether it be going vertical or even getting into land speculation and doing the horizontal development themselves, sometimes in a JV, sometimes in some other type of partnership. But it's really forced folks to get very innovative, because there's only a limited amount of supply and everybody wants to grow. So in essence, it's an increasing zero-sum game, if that makes sense.
Yes, that's a good way to put it, actually.
Yeah.
And speaking of limited supply, Dean, tell us what's going on in the lumber market day to day.
Let's see. Let me roll the dice. We might have some. No.
No dartboard.
So yeah, that's been challenging, right? I wish I don't think there's a manual out there how to run a business during a pandemic. So I think we're changing daily, trying to source material. Now we're running into MyTech, which is our software developer, our metal connector plates to hold our trusses together. So everybody's trying to push lumber on me. I'm like, well, I don't need lumber because I can't get metal connector plates to build my trusses. So futures is down 5 days in a row, which whatever that means. So been a struggle, tough. Like I said earlier, with theft is at an all-time high. And you know, luckily we have some really good vendors that have helped us through this, and we keep continuing to grow with them. So it's not a fun time to be a manufacturer, but we've navigated through this and figured out ways to source material, and we're looking really good on lumber, but plates are an issue, and we've had to kind of scale back. But the demand is through the roof. I know there's probably 8,000 units of multifamily that needs to get sourced today that are already in production, and nobody's taking those contracts because everybody's afraid. But not me, because I'm playing futures and I'm gambling, and I'll figure out a way, right? So materials is a big problem, and
Yes.
we'll see what happens. Roll the dice.
I remember years ago when copper prices ran up, people were stripping copper out of job sites. Now it's lumber. Matt, from an insurance perspective, are you insuring these construction sites earlier in the process? Have your premiums gone up with these challenges this year?
Yeah, the frame construction market has, it was already going up prior to this year, just with some of the larger losses that have occurred. But with to Dean's point, the theft is occurring on site as well, and so that's impacted builders' risk coverage. So yeah, we are seeing impact as a result of that.
So it's another cost. And when you think about everything we've talked about for the last 30, 40 minutes, it's increase in demand, increase in costs. How do we improve supply to offset some of that? I guess it's a good segue into whether or not we see any permanent solutions. Rich, what about you? Do you see any opportunity for modular 3D built homes, any of these new technologies coming into the market? Because then you could secure the land, develop the land, get it shovel ready, and bring houses out of a factory. Is that anything you've thought about?
Absolutely. In fact, we're actually acting upon it, not at the community level yet, but in the modular space, in an infill platform. There's opportunities in either HCV or areas that have not yet gentrified to buy very, very cheap land, lots really, raise the existing home and bring in a modular product that on day one is the nicest home on the block. And so it does a couple of things. It gets over a little bit of that stigma of bringing the home in on a truck that we still have to deal with. But at the same time, you have a ready resident, and you're part of gentrifying a community. So it's been well received. We're primarily doing that in the Florida market right now, Tampa, St. Pete, a little bit down in Naples, but there's a lot of opportunity there because the burden of the production, probably 90% of the production, you still have to put it together once it gets on site, is with another operation.
Is having to add on to that, yeah.
Mm-hmm.
The risk associated. We have a question coming in about if a developer and owner of land has a lot of lots, are they using more than one contractor to build on it? Steve, what's your experience with that?
In the Phoenix market, from a community standpoint, it's typically your plumber does all of the plumbing, your framer does all the framing. They're not interchangeable. I know back in the Midwest, we see and hear a lot of, you get awarded lot 34 and 58, but we have a lot of big trades out here in the Southwest market, and so you typically see an award level going at a subdivision. Sometimes within a big master plan community, we've seen some awards that will go even within the same builder. This plumber takes this part of the subdivision for a plumber or for a builder, and then this phase goes to another plumber. But for the most part, everyone is on the subdivision level. It's not split out amongst lots or even building numbers.
Mhm. Dean, same for you?
Say that again. So
Are you finding that the question was whether or not, if it's a big parcel of land, a lot of lots or houses to be built, are you seeing that there's more than one GC on the job?
yeah, it's pretty much the same person, and especially trades also. Like I said, one framer, one truss plant. I mean, there is, with what's going on in today's climate, that there's a lot of shuffling right now. There's a lot of material providers / trades that can't perform, various reasons, material, labor. So you'll see a lot of contracts being broken and switched to different framers, to different truss plants. You drive around town, Arizona, obviously across the country, but what I see driving around town, there's just houses you can frame the house, but then the houses are sitting 4 months before another trade gets in. So where do we kind of stop, and get some control? And then, the framer has to go back in 5 weeks in the Arizona sun. The house is garbage because everything's twisted and hasn't been wrapped and sheared. So a lot of uncertainty how we're going to go forward, but you'll see different trades bouncing around. The contract's set, but if you can't perform, everybody's just trying to figure out who can give me trusses, who can give me lumber, who can do that. And there's a lot of that going on.
Rich, another question that might be best to start answering you. It's technical about zoning rules. Are the local munis objecting to rental homes versus retail homes? And then in particular, modular, another question came in about whether or not we would see any ADUs added on to any of these houses. An ADU is an accessory dwelling unit. If you see that most of the build to rent is very high density, I don't know if I've seen anything that would have room for an ADU, but I'm curious what you would say about that, Rich.
There's a couple of different questions there, Margaret. Let me hit the first ones. Most of the pushback on the SFR in general, if there is pushback, comes more from HOA guidelines than it does municipalities. At least that's our experience so far. When you get to the modular construction, then we're definitely seeing that the municipalities and local authorities, their inspection process or their building authorities are just not up to date with the modern modular technology. So that process can be time consuming to get the state registration. And then even though you have the state registration in a particular factory, the local inspectors can still make life unpleasant. And so it's a relationship process that will probably be ongoing. As far as the ADUs, I have not seen ADUs brought up yet. It's an interesting concept. But I would tag on to your comment, Margaret, about the density piece. I think that's a differentiation between the for retail and for rent community perspective. As we look at designing communities right now, density is mid to low on the priority range, where it might be higher on the retail range. Because remember, the retail side has a one time to make their profit, where the community, we want it to be Disneyland forever, which means you've got to think ahead on parking, density, storage, future needs, all those type of things. So it's density is definitely something I think it's an inhibitor to just taking a standard retail community and flipping it to SFR. It could backfire. It could definitely backfire on you.
There's a separate but related question, maybe Matt or Rich, you could answer it, or even Dean, about having product that's attached versus detached, what the risks are associated with that. I guess it depends on the market, how much construction defect liability risk there is. Matt, any thoughts on that, or anyone?
Yeah, I mean, as far as risks from an insurance cost perspective, I could say that, if you've got attached product that has 5 units or more per building, you're going to see a higher insurance cost. So that's something to be cognizant of as you're planning.
Rich, a question for you. Are the projects that you're doing single plat or single lot?
They can be both. There are some times when we are taking over a project or coming into a project that's already been through all the entitlements and approvals. We're just coming in to provide some funding that might be lacking. We live with what's there. If And then we've done the single lots as well. We probably prefer the single lots. I know there's a lot of chat I'm watching on the side here, Margaret, about multifamily versus single family. We absolutely prefer the single family setup in a community, but the reality is that a lot of land pieces have already been entitled and approved for multi. And at that point, you've got to decide, okay, is it better than nothing? Can we take it? I think the problems with multi are not, we see it as not so much insurance. That's just a cost factor. It's a math equation, that piece. It's okay. These are single car garages. Nobody's using it for a car, which means all the cars are going to be on the driveways. What if they have 2 or 3 cars? Now that all the cars are going to be on the streets, where are the kids going to play? So it's more the functionality downside of the multifamily that we're looking at.
Yeah, it's interesting because multifamily apartments have been less popular because of the pandemic and then the social unrest and protests in some of the bigger cities. We've seen a lot of multifamily capital, REITs, and executives come into our space. So that might change the nature of the product and make it more sticky as well. We had a question about whether or not build to rent is driving up the cost or the lack of availability of homes, I guess, for consumers. It's a good question. I don't know the right way to answer it. I think more demand and less supply obviously increases value and pricing overall, but there are an awful lot of tenants and families, consumers that prefer to rent versus to buy, especially the first home. So in that way, I think the industry is definitely offering a service. There's also a question about who's the long-term owner of these products. I think it's the SFR REITs and some of the sovereign wealth funds. And a lot of folks thanking Rich for his service, and we thank you as well, Rich. Maybe I see Dennis rejoining us here. Maybe we could wrap up. I'd love to ask each of you, what do you think is the long-term opportunity? I feel like the Alliance came together about 5 years ago looking for ways to make housing more efficient, more affordable, more attainable, and build to rent is especially an easy way for the industry, at least, to get used to building in a more effective way. Are there long-term benefits that you see will result from the crunch we've been in for the last year between demand and component inflation?
I think with, kind of copying that model, like you said, a lot of the builders are changing to like a hybrid type product for fast. Bottom line is we need units, right? We just need units. And how are we going to get the units? Nobody cares about the 4th bedroom option, the extended garage. They just need a space to live and go. So as you try to accommodate the demands today, get what they want today to get units, and then you can reevaluate later. And right now we just need units. So simplicity, stripped down models, mass production, less plans, less options, just go and get units, and we can prefab and we can push units that way. And then if we have to, if the buyers want something different, we'll reevaluate. But right now, I think all the builders can get away with stop giving the options, stop telling the builders what they want, just give it and they'll buy it. And just repeatability and go. And then if it doesn't sell, you reevaluate.
Yeah.
I think it's a great learning opportunity that we can implement different technologies with the simplicity and figure out how to build upon those within optionality. And so, we're in a number of different moves right now with robotic station layouts. We're trying to figure out how we can use BIM as a resource, which has been, really not well adopted by the single family residential through the optionality. And so we can incorporate a number of different technologies and create efficiencies, whether those efficiencies are in scopes of work or within just the building information modeling, and process those over to the single family residential. And so I think as we come out of this market mayhem that we're in right now, that there's a lot of opportunity, a lot of learning opportunity that trades, manufacturing, supply chain can learn from this.
And hopefully the tide is out right now, but as the market softens a little bit or feels easier, less constrained, that we would continue to leverage those lessons learned. There was another question about the risk of monotony. If all the build to rent product tends to look the same, does that influence demand, value, pricing, and do you change the product? Do you change the amenities offered? Maybe Rich, you could answer that.
Sure, I would say that's an excellent point. Where if the municipality doesn't demand or have some kind of monotony rules on their own, then it's left to the discipline of the builder or SFR operator, whether it be monotony of color choices, of type of plan, those type of things. So it can definitely lead to be very problematic if the builder is not disciplined and that doesn't have the municipality to provide the guideline.
Margaret, I didn't want to interrupt the flow of things. I jumped in. I think you guys, everyone's done a phenomenal job of balancing both the conversation on center stage that Margaret's been moderating and kind of running the questions as they're coming through the panel. I'm impressed. I think Rich was even answering and typing at the same time a few times. So
Multitasking, I love it. And
I mean, kudos to him. I think, I did want to jump in. There's a couple questions that were floating out there that I wanted to make sure we get answered. I think you just started to hit on it with, talking about the specifications in the design of these products. We talk about simplification, repeatability, smarter designs from a production perspective. When you think about your MEPs and the material specifications for that longer term hold as well as buildability, can you just elaborate a little bit more on some of the thinking that goes into the early stages of the design process? Maybe Rich, if you want to start with this one and then.
Sure. I'll start this. When we look at the buildability or the simplicity, I think I divide it between the simplicity, simple for the builder or simple for the resident. And we try to lean towards the resident, which means we'll accept the complexity up front, whether it be the cycle times or different configurations in the field, or even lack of materials sometimes, if it leads to a better resident experience, because that's ultimately going to be the source of that ongoing cash flow, that 25-year cash flow. I think where we start getting into the material choices, that's when we get into the durability and the wear and tear, which I think that's probably beyond the question that you asked, but we look more simplicity for the resident, not the buildability.
Steve, anything you'd like to add into that?
Yeah, I think as we figure out what works and what doesn't on the manufacturing side, I think the equipment we have today, the automated equipment, we're able to build the most difficult stuff the same as we can do the easy stuff because it's the equipment's made that way. So, with our different saw power, how we can kind of mark our plates for our wall panels, our build trusses. So the universal integration between our equipment, whether we're building wall panels or trusses, lumber packages, MEP studs, board studs. So I think we're just in the beginning of it. I think this time around, I think, I have 3 younger boys that I've kind of brought into this market. My youngest doesn't want anything to do with it. He wants to work on Wall Street with Margaret, but my 2 other boys are in the business, and how do you make it attractive and fun? And they see how backwards we are. Our industry is so far backwards, and we're just becoming to the forefront of being more innovative and automated. So when you bring these different product lines in, we can figure out ways to mass produce with the equipment we have. And people will say, oh, I've built wall panels 10 years ago, they don't work. Well, you know what? It's a different generation this time.
Mm-hmm.
It's different software, it's different designers, it's young people that want change. And that's what I'm seeing. Our industry is getting a little younger and more aggressive and figuring out ways to work smarter, not harder. And, like Steve's got that class going, how do you make our industry attractive? Well, you make it cool, right? You have cool equipment, you have cool software, 3D modeling. You got to know what you're doing if you're going to go to the next level in this business. And we've really captured that audience and took these different product lines as guinea pigs. And now we can do more of the difficult stuff. I mean, we love this built for rent, right? It's blow and go all day long. I mean, we're doing double the volume with the manpower we have because of the simplicity. So, if you want units and you want fast units, get on train with this because you'll pump units.
Great, thanks, Dean. Steve, anything? I know you've mentioned on this, you've talked on this subject a couple of times. Anything else you'd like to add to that before we close it out?
No, I think, to Rich's perspective, making it viable solution for your end user, making sure that you're selecting the right fixtures, the fit and finish that is going to give you that long lasting or longer lasting. Don't go on the cheap. with fixtures. Don't go on the cheap with certain things, because you do want that. So your cost on turnover when you're moving a tenant out and bringing another one in, or your cost in service, for those tenants, if you're constantly changing out garbage disposals or faucets or countertops, because of, these guys are going to be harder on their units than from a single family residential perspective, where they have a vested interest in that property. So the right fits and finishes make a difference.
Okay, great. Matt, any final words on that one?
Yeah, I think the future is bright for this space. I think we all see that the SFR BFR space is easily going to grow 2 to 3 times over the next 5 years. But I think if we can, if we see some of these emerging technologies and ownership models gain more traction, that number could be significantly higher. I think, the pandemic has shed a light on the fact that people want more space and are looking to the suburbs and looking to this model. And affordability for a lot of folks has gotten more difficult. So for home ownership, so this is, there's a lot of good indicators towards growth in the space. That's great.
Okay, excellent. No, I really appreciate that. There's one other question I want to throw in. I think Rich and Margaret, you'll be best positioned to answer this one out the gate, and then we can go around the rest of the room. But it came back to an analysis on the return of investment for these types of projects, and really this for rent versus for sale. And the question came out as, if land is the most valuable part of the project, where is the better ROI? Is it going to be on the for sale or the for rent side? And I think this is a bit of a tricky question with a lot of assumptions wrapped into it, but would love if you could kind of share your perspective on that. Maybe Margaret, if you want to go first.
I think what's going to happen is that the REITs that have established themselves on the SFR side over the last decade, they started out as aggregators, and then they internalized the property management, the acquisitions, they went public. They have access to longer term, less expensive capital, both debt and equity. I think they're going to start seeing the relative value and attractiveness of these built-to-rent communities and start aggregating them here soon, because what's happened is that a lot of very expensive 20+% JV type private equity was being used on the development side. But once you get them to the point that they're cash flowing, the risk is substantially lower. So you can sell for a great price, a great exit cap rate, and then put them into a balance sheet where they'll be held for the long term. So my guess is 5 years from now, the owners of these houses are going to be the big REITs. We might see some new REITs, we might see some new IPOs, or we might see some multifamily companies pivot, because a lot of the high density product we're talking about, in my mind, are horizontal condos, and you might see multifamily REITs get into them.
Rich, do you have any additional thoughts on kind of the analysis on, the return on investment for land, whether it's plays in a for sale or a for rent product?
I think that the key word there is it depends on the time
Yeah.
full,
Yeah.
and like anything. So if you've got that long projected outlook, I think that the dirty hidden secret of a planned community is that in the long run, it almost doesn't matter what you pay for the land. If you were to take out the financials of a 500 unit community, $80-90 million by the time you're done, what does it matter if you pay 10 million for the raw land or 11 million in the big scheme? I'll stop short of saying it doesn't matter, but the longer the time frame, the easier it is to pay for the land up front.
Okay, great. No, and it's a tricky question. Also depends on the operational capabilities of those pursuing the opportunity, right? And where we are in the market. I think if it's all right with everyone, I think, we're at the 3 o'clock mark. We want to take a few minutes just to wrap this up, tee up our next event. One final question, just want to get everybody's perspective. So everyone was really excited, seems very excited about the opportunity ahead with Build for Rent. It's still in its infancy. The rules of the game are still being laid out for us, and we're collectively writing them. I'd love to kind of get your perspective. If you all had to take out your crystal ball and think about where this segment's going to be in 5 years, what's your take on it? What are the things we need to watch out for? What are the additional opportunities out there? How is it going to take shape? And I'm gonna, as the operator on the call, I'm gonna throw this one to Rich first, and then work our way around the room.
Sure. I think it's going to continue to grow, Dennis. Right now, some of the builders are reluctant to say how much of their annual total is actually being pushed into the BFR space. because there's still in their mind a little stigma, or there's some cannibalization to the regular. So it's going to continue to grow. 5 years from now, I think it'll be 20% of all new units produced in the US.
20, wow.
Wow. It's a big jump from my earlier estimates in the event advertisement. I'm gonna have to update those numbers. Matt, what are your thoughts?
I mean, looking at the private equity groups tend to win. Look who's historically participated in the sector and who continues to jump in. I think they're recognizing that the American dream for the younger generation, under 30 years old, no longer seems to include owning a house. And it's more about flexibility and freedom that comes with rent and investing their dollars in other areas. And 20%, that's the first I've heard of that, but I wouldn't doubt it, especially as some of these technologies continue to develop in the space. That's the future is bright.
Great. Yep. Thanks, Matt. And Margaret, I'm gonna save you for last, so you can kind of wrap up the session, if that's right. Dean, why don't you give us your take on where we are in 5 years?
I think it's like, what does the consumer want? And as there's different SFRs for each, the older group, the younger group. The younger group wants easy DJ at the pool, barbecue areas, fun, little backyard, so they don't have to live in a 2-story apartment and go downstairs and let their dog out in the middle of the night. So I think as the consumer the younger group, they can't sit still, right? So I don't think they have the patience to own a house. And I mean, I have 3 boys and I know that they actually have houses and they don't do well at it. But I think as the consumer still, the younger generation wants this product, and as the older group, I mean, I think it's going to be strong. And like you said, with the amenities, keeping the amenities fun and less work for the different groups all day long, this is a perfect business model.
Great, thanks, Dean. Steve?
Yeah, along the same lines, last year I moved my mom into, it's not really a build for rent, but the old Del Webb, Sun City, Arizona. We're essentially talking the same concept that was, in the 60s and early 70s of, you put these repeatable units over and over and over, and these people live in this one area where it is low maintenance, and then you have your millennial side as well, that they saw their parents go through the construction recession, the housing recession that we had in 2008, and so to risk their money in the real estate market may not make sense, if they saw their parents suffer through that. And so I think the BTR side continues to just strengthen. I think it provides a lot of opportunity and a lot of runway around efficiency, around quality, in repeatability throughout the markets, especially here in the Phoenix market. I see it as being a success.
So with that, do you think it makes a starter on all sides of the business then, not just for this segment?
I do.
Yeah. Great, thanks, Steve. Appreciate that. And Margaret?
I agree. I think there's a great opportunity to instead of adding to supply, folks like Rich are actually creating demand, because you used to be able to lease a new car, but you couldn't lease a new house. Now you can lease a new home that's beautifully spec'd, professionally managed. Someone will mow your lawn, take out your trash. It's just, there's an opportunity here. And as Steve says, for the boomers, they could maybe have 2 of these and go to a different part of the country for 6 months of the year. So I think it's affordable, it's attainable. And I really hope that Rich is right, it's a bigger part of the total going forward, because the simplicity on the construction side will make it much more likely that some of these construction efficiencies stick overall.
Fantastic, excellent. Well, I love that. We'll have to track towards that goal, and I think there's a lot of positive reinforcement for the mission behind this session in general, which was, again, how do we use this opportunity? How do we seize this moment in time to drive more innovation in the space? Want to say big thanks on behalf of the entire Alliance network for getting together and sharing your thoughts with us today, folks. This has been great. Margaret, thanks for leading. Rich, jumping out and taking your time. Everybody, I know everyone on that's been that's dialed in as well has a lot to choose from today. Our friends over at the Ivory Prize had their award announcement today, and a few of our community members were also awarded, received recognition in that. I know there's ULI councils today, and there's a lot to choose from. So I really appreciate you carving out time to join us. this afternoon. And just one more, if I can get the screen to share the way it's supposed to, I want to just tee up some things that we're going to be working on over the next couple weeks here. So for those of you that may not have joined right when we started today, there will be a recap from this entire session shared via email in the next couple days. So you'll be able to see a complete replay as well as highlights from the conversation. There'll also be links for the Build for Rent holistic infographic that we've created and the market snapshot that was put together by Brad Hunter. Our next third Tuesday event is going to be what we call our half day event. So this is going to be June 15th from 12 to 3 p.m. Eastern time. And this is going to focus on digitization. So we've been following this for a long time. It's something where with more connectivity at the job site, the need to squeeze even more juice out of the orange throughout the entire process. How can we as an organization and a network unite together to highlight opportunities to digitize the business and streamline the efficiencies? So we're going to be getting together again, June 15th. Please feel free to jump to the website, register for that event, and we'll look forward to seeing you there. But with that, thanks again, everyone, for joining us today, and we'll see you at the next event.
Thanks, everyone.
Thank you.
Thank you.